Billionaire hedge fund pioneer Paul Tudor Jones allocated 1 to 3% of his investment portfolio to Bitcoin futures in May 2020. And a month later, he was seen repeating the cryptocurrency's most bullish narrative during CNBC's Just Capital event held Wednesday. The head of Tudor Investment Corp discussed inflation and how it will be an unresolvable issue if the Federal Reserve continues its open-ended monetary policy. He noted that the U.S. central bank might find it almost impossible to keep track of it. The statements shortly followed the Fed Chair Jerome Powell's virtual news conference after a two-day policy meeting. Powell signaled their plans to keep benchmark interest rates near zero until 2022. He also said that the Fed would continue purchasing Treasury and mortgage securities, starting with at least $80 billion in Treasuries and $40 billion in mortgage securities a month. The policy aims at aiding the U.S. economy from the aftermath of pandemic-related shutdowns. The Fed believes the economy would shrink by 4 to 10% in 2020, leaving the market with a longer-than-expected road to recover. While the unprecedented expansionary policy helped Wall Street to pare its March 2020 losses, it also pushed the U.S. dollar, a global reserve currency, into negative territory. Tudor Jones noted that the Fed's protective measures left the greenback under the risk of devaluation. The Fed, on the other hand, saw a little possibility of inflation shortly. Powell stated that the economic slowdown had dampened consumer demand. Meanwhile, the record number of unemployment claims are further capping wages from rising. Tudor Jones' stress on inflation, meanwhile, is long-term. In an investment letter published in May 2020, he said the central banks would be on the hook to aid an increasingly leveraged economy. He highlighted the U.S. M2 supply that rose at rates last seen during World War II. Tudor Jones admitted having bought Bitcoin futures to protect his $22 billion hedge fund from inflationary risks. Excerpts from his letter: Bitcoin, unlike fiat money, has a limited cap of 21 million tokens. Meanwhile, its supply rate gets cut by half every 4 years, which makes it a deflationary and scarce asset to own. With Tudor Jones' repeated warnings about fiat inflation and his involvement in the Bitcoin space, the legendary investor could help propel the bullish narrative further among his Wall Street peers.